Are you prepared for some fascinating facts about Tesla? As we delve into Tasha Keeney's most recent expert analysis, get ready to be astounded. Tasha has the inside word on the latest developments from Elon Musk and the company, and she possesses some incredible information that might quadruple your investment in Tesla. Tasha has you covered on everything from the expansion of Tesla's insurance company to the possibility of a new $25,000 Tesla. By the end of 2023, Tesla's insurance policies are expected to cover more than 45 states, making this an excellent moment to invest in the business. Perhaps Elon has some surprises in store for us as well, who knows? Press the like button, take a seat, and prepare to be astounded by Tasha's knowledgeable observations and analysis. Remember that dollar cost average investing in Tesla is Tasha's preferred method of making investments. Follow her lead, and together we'll explore what the future holds. Tasha recently made the following public remarks once more: I believe that electric vehicles are here to stay. If I were Ford or any other traditional automaker, I would be extremely concerned because the majority of their installed base in the cars they sell are gas-powered. I want to talk about a few recently released Tesla updates that may have an effect on the firm before we talk about two big developments that would instantly force Tesla stock to double. Tesla's most recent earnings conference indicated that demand is greater than ever and that production is outpacing supply by a factor of 2, but the state of Texas in particular will not start manufacturing Cybertrucks in large quantities until 2024. The statement reads, "The expansion of Tesla's insurance company, which is expanding at a quarterly rate of 20%, is going to be my first catalyst for 2023. There is a huge possibility for Tesla to deliver up to 2 million vehicles in 2023. Now, this new car might be the $25,000 Tesla that we've all been waiting for, but I was curious whether you thought Elon had something else in store for us, or if you thought we'd see a less expensive Tesla on March 1st. Please let me know in the comments." I brought up Tesla insurance because although it's sometimes overlooked, consumers should pay attention. By the end of 2023, Tesla Insurance will offer its services in 45 states, having now established its presence in the top states. Everyone who knows Warren Buffett well knows that decades ago, the insurance industry supported him as he established his enterprise. Tesla is in a fantastic position to capture a significant portion of the $300 billion US vehicle insurance industry, which is currently growing. They will be very difficult to compete with. Prior to delving into the most recent advancements that you might have overlooked, bear in mind that my preferred approach to investing is to just dollar cost average into Tesla, and I will keep buying more shares even if the stock falls 5 or 10%. This is because, in my view, despite everything you may have read or heard about Tesla in the media, the company still has a lot of space for development and innovation. The news we have is startling. Is the man still alive? Many doubters thought Elon's selection as Twitter CEO would be bad for Tesla's standing. But now that they've heard Elon speak, doubters ought to feel more comforted than before. Demand is the most frequent query received from investors. To allay your worries, let me tell you that so far in January, we've had the strongest orders of the year Elon added. Making automobiles accessible to as many people as possible has always been our aim at Tesla. So I'm happy that we've been successful in this endeavor. The price adjustments affect the typical consumer, in my opinion, because so many people wish to purchase a Tesla but are unable to do so. In spite of the downturn in the car industry, I think Tesla will keep setting new sales records. Tasha said, "If you don't believe me, just hear me out. Considering everything, I think it's a good thing." Additionally, we're making excellent strides in cost control, with production costs in Austin and Berlin declining in tandem with growth in output. Thus, Tesla will keep setting records in spite of everything. Please listen to me, even though I realize it sounds absurd to suggest that Tesla might quadruple in value over the next 12 months. However, I still want to gradually purchase Tesla shares whenever I can, regardless of whether it occurs in the upcoming year. In addition, Cathie Wood has been buying the decline repeatedly and has an absurd price goal for Tesla for the next 5 to 10 years. It's evident to me that Tesla needs to boost earnings and cut production costs in order to meet its ambitious price targets. I believe the business is headed in the right direction with these two initiatives. Additionally, I believe that a lot of conventional manufacturers are rushing to catch up with Tesla because they first had doubts about its capacity to meet consumer demand. Tasha summarized her discussion of Tesla's potential and latest developments. They think that since traditional automakers primarily sell gas-powered cars, electric vehicles are the way of the future. Tasha highlights two noteworthy events that have the potential to quadruple the price of Tesla stock: the expansion of Tesla's insurance division and the release of a new, reasonably priced $25,000 Tesla. With aspirations to reach 45 states by the end of 2023, Tesla insurance is presently available in the best states and may potentially capture a sizable portion of the $300 billion US auto insurance industry. She thinks that investing in Tesla shares by dollar cost averaging makes sense since they see potential for innovation and growth. She also points out that Elon Musk has reported solid order numbers for January thus far, despite some doubts about demand. Tasha is certain that Tesla will keep smashing sales records and that it is headed in the right direction in terms of higher earnings and lower production costs. Before we go, let me provide a very interesting advantage about Tesla insurance that most investors are not aware of. Tesla has adopted an innovative approach to auto insurance that might yield significant benefits for the company. For instance, fixing a Tesla electric car might be expensive. This has caused the car maker and insurance firms to take opposing positions. By enhancing the Tesla vehicle's software and design, CEO Elon Musk is attempting to lower insurance rates and repair expenses. Conversely, because of the expense of repairs, insurance companies are writing off low-mileage Tesla Model Ys that are involved in collisions and selling them at salvage auctions. Elon Musk said that insurance premiums from outside insurers were unnecessarily high during Tesla's Q4 earnings call on Wednesday. Tesla's insurance division was resolving the issue by offering reduced rates to Tesla owners. Musk also discussed the company's attempts to lower the cost of Tesla repairs in the case of an accident by enhancing software and design. It's amazing how little adjustments to the bumper's design and the availability of replacement parts required for accident repair can have a significant impact on the cost of repairs. Most accidents are actually minor, like a scratched side of the car or a broken fender, stated Musk. Recent research by Reuters has revealed additional details regarding the destiny of low-mileage Tesla vehicles involved in collisions. Less than 10 000 miles were on the odometer of most of the more than 120 Model Ys that were deemed total losses following collisions and put up for auction in December and January. The two biggest U.S. salvage auction companies, Copart and IAA, have data that shows the retail prices of these cars range from $60,000 to over $80,000. The vehicle's type of collision and the presence of post-crash images were mentioned in the sale postings, but the precise nature of the damage was not disclosed. When the cost of repairs is too great, insurance companies typically declare a car to be a total loss and pay the owner compensation. The Copart postings sometimes name the insurance companies State Farm, Geico, Progressive, and Farmers that purchased the wrecked cars back and put them up for auction. A division of Berkshire Hathaway owned by Warren Buffett is Geico. Tesla's CFO Zachary Kirkhorn revealed during the company's earnings call on Wednesday that the insurance division has generated $300 million in premiums annually, growing at a pace of 20% every quarter. This growth rate outpaced Tesla's vehicle business growth rate. All of the Model Ys that Reuters examined for the investigation were either 2022 or 2023 models made at the Austin, Texas, or Fremont, California plants. All but one of the 15 Model Y long-range vehicles manufactured in Austin between June and November that were deemed total losses following the collision had less than 10,000 miles on the odometer. A Austin built front collision 2022 Model Y long range with an estimated repair cost of $50,388 was listed by IAA in early January, while having a retail price of $61,388. The car's owner was not identified. Retail pricing for a different Austin-built Model Y involved in a side crash was $72,600 $60,000. With an estimated repair cost of $43,814 IOA. So that concludes our conversation for this video. Once more, please subscribe to Wall Street Games right now if you haven't already. I'll see you in the next video, so make sure to hit the like button.